Okay, well, thanks again for joining us today and welcome to DPA 101, what every agent and loan officer needs to know. My name is Will Medina. I'm a part of our DPR team. We also have with us today Melinda Harris, our Director of Marketing and Communication, Keith Futrell, DPA Program Specialist, Tracy McIntosh, our Customer Success Manager, and Lori Johnson, our Customer Success Specialist. A great group of individuals with us today. They will be answering questions in the background, so please feel free to use the Zoom Q&A feature to engage with them as we go. We find it much easier to locate and answer those questions. But of course, we are also monitoring the chats. And before we get started, a quick note, today's recording of the webinar will be shared with everyone. So first, a little about us. Down Payment Resource was launched in 2008 to solve a problem that drove a lot of people in real estate and mortgage lending rather crazy. There was no easy way, it seemed to be, to find and track homebuyer assistance programs. So DPR stepped in and developed an easier way to connect eligible borrowers with hard-to-find resources like DPAs, grants, mortgage credit certificates, and other forms of assistance. We provide the tools and down payment assistance program information for real estate agents, loan officers, and ultimately consumers to help all of you find and better understand the down payment solutions available for your buyers. Ultimately, we're here to help you connect home buyers to the down payment help they need. So today we will be discussing, as mentioned, the basics of loans, grants, tax credits, and other programs that can help eligible buyers achieve the down payment faster, help with covering closing costs, and get them into a home sooner than they would have otherwise. Now, just as a quick snapshot of the current state of homebuyer assistance programs, of all the programs available out there, 74% are some sort of down payment or closing cost assistance. Now, that's really a catch-all category. So we'll dig deeper in a few minutes, but it's important to know that not all DPAs are the same. 81% have deferred payments, meaning you don't have a monthly payment on the DPA loan for some period of time. 53% are forgivable, either in part or in full. Essentially, they become a grant over time. And 50% are both deferred and forgivable. And then there are still other down payment assistance programs that are true grants at closing or are repayable monthly after closing. Now we'll be breaking these down further, as well as the affordable first mortgages and tax credits or mortgage credit certificates in a moment. So where exactly can these programs be found? Well, these programs are literally everywhere. Some markets have more homebuyer programs than others, but there's a state housing finance agency in every state, and their programs are available statewide. So there's literally no county market in the country where there isn't at least some kind, right, some form of down payment assistance or other homebuyer assistance. Well, we always get asked who offers these programs then. So we know they're everywhere. Who offers them? Who funds and administers these programs? As mentioned, every state has at least one housing finance agency. City and county governments often have community or economic development departments or housing authorities. There are a number of nonprofits, an example like NeighborWorks and Neighborhood Housing Services, and others which operate in markets across the country with varying programs. Another example are employers, such as municipal governments, hospitals, and universities that also offer their employees a benefit, in this case, down payment assistance. There are community action agencies, land trusts, and so many other organizations out there that are all trying to help open new doors to homeownership and promote housing growth and responsibility in their market, which is essentially your market. And they've all got funded and available down payment assistance programs. So we've looked at what programs may be available, where they may be located. So let's kind of look at some trends related to down payment assistance programs. We're continuing to see that demand is through the roof. Providers are increasing assistance amounts, income limits, and purchase price limits to help more buyers in today's market. There are new state and local programs which continue to launch in markets nationwide. There's it's great. There's so much more attention on affordability and down payment assistance now than in many years, right? As noted, 82% of all DPAs are funded and available. So it is safe to say that these programs are still available and are not going away. In fact, our recent Q1 2024 homeownership program index report showed a 9% year-over-year increase in available programs, which raised the total number of programs offered to a little over 2,300. As noted, more programs are coming to markets all over the country and offering you more opportunities to help new buyers. In that same report, the Homeownership Program Index report, we reported on growth in home buyer assistance programs that expanded inventory options for home buyers as well. That included support for manufactured housing, 2 to 4 unit properties, so long as they are owner occupied. So if you take a look at the infograph, right, regarding manufactured housing, 6% increase since Q4 2023 and a 9% increase since Q4 for multifamily properties. Also noted is growth in below market rate resale programs, where these are often silent second loans that have no monthly payment requirement for 30 years or until the property is sold. Now, all of these programs do share some basic universal requirements. For example, they are only for owner-occupant buyers. These are not for vacation second homes or investment properties. Although you may find that in some markets, the assistance may be available to buyers, as mentioned, of 2 to 4 unit properties, as long as they will occupy one of those units. Now, the programs all still require some minimal investment from the buyer, as they say, to keep a little skin in the game. The investment can take the form of a monetary investment, which can range from $5 to $1,000, potentially more. The buyers are also investing time. Let us not forget, for example, by completing their home buyer education requirement, which buyers typically complete a home buyer education course to qualify for a down payment assistance program. And of course, these are not cash buyers. We're talking about buyers financing their home with a mortgage, so they have to qualify for a first mortgage as well. Now, with those universal requirements in mind, let's take a look at the 3 most common types of homebuyer programs and what's unique about each of them. The 3 most common types of homebuyer assistance programs are the down payment assistance program, the affordable first mortgage, and mortgage credit certificates. There are variations and certainly many other names for each type of those programs, and that's what will help clarify as we learn how each one works. And remember that as we go, no 2 programs are exactly the same, but we're going to learn the basics of each type so you can understand at a glance what your options are to help homebuyers. So first, I'd like to review down payment assistance programs. Down payment assistance programs are by far the most common type of homebuyer assistance in most cities. Every state has a housing finance agency, which is the housing division of their state government, and just about all of them have some form of a down payment assistance program, and as well as local government and nonprofit program providers who also offer DPAs. These programs are typically grants or silent seconds that offer down payment assistance of several thousand to tens of thousands of dollars to eligible buyers for down payment help. And if we take a look at this wonderful graph here, starting at the top, we've got grants, gifts that do not have to be repaid. Okay. Repayable seconds, funds provided at closing that may or may not accrue interest, and the loan could range from 5 to maybe 30 years with varying repayment terms. We've got deferred silent seconds where repayment of the original amount is postponed until one of several events occurs. Commonly, it's when the borrower sells, there's a refinance, or there's a change in occupancy. And lastly, forgivable seconds, where we have some or all of the original down payment assistance forgiven. Often, it's broken down as a percentage of the loan being forgiven each year for a predefined number of years. As an example, it's common for a forgivable DPA to be forgiven, let's say, 20% per year over the course of 5 years. And often, down payment assistance programs also allow the funds to be used for closing costs, prepaid expenses such as certain escrow expenses, rehab or repairs, which can be particularly important to enhance a property or accommodate livability standards for disabled buyers, and even loan principal reductions, the most common uses. Now, all of these uses help the buyers shed the costs of purchasing and financing a new home. And we're even seeing more programs allow their funds to be used for temporary or permanent interest rate buydowns. So, one of the most common misconceptions about down payment programs is that buyers must be first time home buyers. In fact, there are over 2,300 programs across the country maintained in down payment resource. And of those, 40% of them have no first time home buyer requirement. Beyond that, most programs adhere to HUD's definition of a first-time homebuyer, which effectively states that you are a first-time homebuyer if you haven't owned a home in the last 3 years, with still more exceptions to that rule for widows, divorcees, displaced homemakers, and other circumstances. But in just about every market across the country, we see programs that waive that first-time homebuyer requirement in, say, targeted areas, make exceptions for veterans or certain professions, or just don't have the first-time homebuyer requirement at all. Now, while down payment assistance comes in many forms, they all help the buyer reduce the down payment burden, open new doors to homeownership, and ultimately pocket a little extra cash upfront and along the way for those other additional homeownership obligations. Many of these programs are grants, meaning they are interest-free, payment-free gifts to buyers who meet the eligibility requirements. Others may bear interest but defer the payments for the life of the loan until sale, or even better, until the affordability period expires. So just as an example, many programs stipulate that the buyer occupy the property for a certain number of years. That could range from 3 to 10. And then the lien is forgiven, essentially becoming a grant. For those programs that are not grants, many will take second or third lien position to allow for layering of additional assistance programs as well. So another common question is, what are the eligibility requirements for these programs? And we've actually put together the following list. Eligibility, of course, depends on the program and the funding sources. Very important. Income and purchase price limits are always market adjusted, often based on calculations for the area median income, the average income of their market, AMI, as it's said. But basically, they all have income limits ranging from 80% all the way up to 140% of area median income, right? AMI, and sometimes even higher, which can creep into six-figure incomes in many cities. They typically have sales price limits too, but those are usually in line with HUD's loan limits in each market, offering assistance at or beyond median home price values. Now, the location of the property is critical, as each program, especially at the city or county level, offers assistance within specific boundaries, such as city or county limits. But remember that the programs from your state housing finance agency offer assistance statewide, covering your entire market. And I will note that we even have some nationally available programs integrated into down payment resource. Now, some programs have more needs-based eligibility criteria, which involves an evaluation of each buyer's scenario and assistance needs by the program administrator. And most programs will mirror first mortgage requirements, as an example, requiring a FICO score of 620 or higher. Homeownership history also makes a big difference too. Many programs are only for first time home buyers, but as mentioned, there are many for repeat buyers or even current owners as well. And of course, remember, a first time home buyer is simply someone who has not owned a home in the last 3 years. Now, I'll expand on eligibility as it pertains to military service and certain professions in a few moments, but both can open new doors to assistance that may not be available to the general public. Ultimately, these programs reduce the buying cost for a buyer and expedite their timeline by offering down payment or closing cost help that enables a buyer to reduce their out of pocket expenses and help retain their liquid savings. Just as an example, think of someone obtaining FHA financing, okay, putting 3.5% down. If a DPA program helps them bring more to the table and instead help qualify for a conventional loan at 5% down, this effectively lowers the monthly payments and the long term financing cost. Specifically, an FHA mortgage has expensive upfront mortgage insurance premiums and higher monthly mortgage insurance costs that last the life of the loan, whereas conventional mortgages have no upfront mortgage insurance premium and lower monthly insurance premiums that can be canceled once the buyer gets to 80% loan to value. When you help reduce loan to value, you also lower debt to income ratios, which helps more buyers qualify and increase their homeownership possibilities. Most importantly, it increases the purchasing power of a buyer's income, allowing them to more readily qualify for the home they like, and in some cases, qualify for a little extra home to suit their family needs. Increased purchase power does offer a competitive advantage. And of course, reducing monthly payments also allows for a little extra cash every month to put back into savings, which has been shown to improve default rates. Now, many down payment assistance programs require the buyer complete a homebuyer education course, which provides valuable information about the home buying process and the resulting responsibilities of homeownership down the road. This better prepares potential buyers for the obligations they face as owners and the steps they'll have to take to get there, ultimately enabling them to be better clients and more adept decision makers for you along the way. And more down payment providers are offering online education options for their homebuyer courses. The course material is typically in line with HUD certified homebuyer education. Most courses are simply an 8-hour class that can be completed on a Saturday or during a few evenings of online sessions at the consumer's discretion. This allows buyers to work ahead towards down payment assistance pre approval and hit the market as more competitive and informed shoppers. Most importantly, these buyers are far more likely, according to HUD and the Harvard Joint Center for Housing Studies, to be successful owners down the road. Default rates are significantly lower when homebuyer education is completed before closing. So now I'd like to take a look at another of the most common homebuyer programs, the Affordable First Mortgage. Affordable first mortgages are additional mortgage options typically only available through a state or local housing finance agency. The most common benefits you'll see are below market interest rates, reduced mortgage insurance costs, and allowances for higher loan to value or LTVs. As an example, Fannie Mae's HFA Preferred and Freddie Mac's HFA Advantage offer reduced mortgage insurance below a standard conventional product, all with a higher LTV. You can typically combine these affordable first mortgage products with down payment assistance and or tax credits from those same housing finance agencies. Affordable first mortgages help further reduce the cost of homeownership for new buyers. Lowering monthly payments through lower rates or mortgage insurance pricing helps increase the purchasing power of each buyer and can potentially expedite homeownership for them, getting them into a home sooner than they would have otherwise been able to. So now let's look at the third of the most common homebuyer programs, the Mortgage Credit Certificate. The Mortgage Credit Certificate, or MCC, is available from state and local housing finance agencies in some states. Not every state offers an MCC, but if there's one in your market, we ask that you take a look. They are a great benefit for home buyers. This offers a federal income tax credit of up to $2,000 per year. Eligible buyers must get an MCC prior to closing and then get to use it every year for the life of their mortgage. The MCC tax credit helps offset part of your mortgage interest costs, and you still get to deduct the rest of the mortgage interest you paid each year. MCCs help reduce a buyer's federal income tax liability by offering a credit for mortgage interest paid. Some MCC providers will allow a lender to take the MCC credit amount and annualize that over a year to increase a buyer's qualifying income. And some MCC providers will also reissue an MCC through a future refinance. So let's look at an example of how mortgage credit certificates work. Let's take a $200,000 home. The buyer closes and makes 12 payments in the year. They paid 4% interest, so $8,000 in interest in that year. The MCC allows you to claim 25% of the mortgage interest paid as a tax credit, so $2,000 in this example. But the homeowner still gets to claim the rest of the $6,000 of mortgage interest paid as a tax deduction every year. And here we have a recent case study, actually in collaboration with Loan Depot. It details the success of originator Mosey Gatling. They've had engaging partners to explore affordable mortgage solutions for homebuyers. The visual is regarding layering two Nevada Rural Housing Authority programs, a DPA and MCC, of course, if conditions permit. Most importantly, the example depicts the potential savings when exploring affordable mortgage solutions for your home buyers. So I'd like to wrap up this breakdown of the most common homebuyer programs with a few other scenarios where there may be additional or even unique benefits for your clients. There are many programs that offer additional or unique incentives to buyers purchasing in targeted areas, which are areas with higher foreclosure rates, vacancy rates, unemployment rates, or parts of town most in need of community investment. Typically, there will be no first-time homebuyer requirement. The assistance amount is increased, and the income limits and sales price limits are often higher. The idea is to promote homeownership in revitalization areas, particularly so that core service providers and professionals can live where they work. Now, these targeted areas are all over the map, not just in big cities. They are usually bounded by specific cities, zip codes, or census tracts, or maybe sometimes entire counties. There are also special programs available in many markets that target certain professions, typically teachers and educators, police officers, firefighters, healthcare workers, and municipal employees. As an example, in Georgia, the state funds the Georgia Dream program that offers $10,000 in down payment assistance to eligible buyers. But teachers, police officers, and nurses can get an additional $2,500 for a total of $12,500 in down payment and closing cost assistance. The idea behind these programs is to enable homeownership among local core service providers. And many of these programs have very broad definitions of terms like educator to include not just classroom teachers, but public school system employees at large, like paraprofessionals, librarians, school nurses, or the term protectors could include police officers, sheriff's deputies, corrections, probation officers, and more. Another targeted audience of eligible buyers is our armed forces, active duty personnel, and veterans. There are so many programs out there that waive the first-time homebuyer requirement for veterans. Some offer higher assistance amounts too. Many of these programs can be used in conjunction with VA loans and ultimately offer our veterans a little more flexibility to become buyers despite homeownership history. And some of these programs offer the same or similar incentives to active military and Guard or Reserves members. So I know we've given you a lot of information today, but we want you to know how to access all of these DPA programs once we leave the webinar. So I'll show you a number of ways you can access DPA info and start to enhance your own marketing. Anyone here, anyone in general, can go to downpaymentresource.com and do an eligibility search for free anywhere in the country to see what's available out there for you or your client. And if you're an MLS partner with Down Payment Resource, we help identify eligible listings in your MLS and match them to all available homebuyer assistance programs. And we provide these matching tools within your MLS agent and client portal listing reports. You also get Down Payment Connect for free through these MLS partners. So we ask that you check out DPR and let your clients know what's available and talk to your lending partners about which programs they may offer. And of course, please let us know if you have any questions along the way. We are continuing to onboard MLSs, and several more will be launching DPR in the coming weeks. Now, if you're a member of one of the partner MLSs, when you are logged into your MLS, we ask that you look for our down payment resource button on eligible listings. You'll see these down payment buttons on agent reports as well as in your client portals. So click it, and we will tell you or your client which programs are available for properties that they like the most. Now, regarding Down Payment Connect, Down Payment Connect is free for members of our MLS partners. If you're an agent and not a member of one of those MLSs, you too can subscribe to Down Payment Connect for your own DPA search page and lead gen tools. And loan officers, we also have a version for you, which allows you to control which programs consumers see, so you are aligned with the product offerings at your company. So you may be asking, what is Down Payment Connect? Down Payment Connect allows buyers to complete a program search from your personalized link. This provides you with the opportunity to generate leads by engaging and educating new buyers about the down payment assistance programs in your market. You can use your Down Payment Connect link on your website, in your email marketing, and across all social media. And just to be clear, you are not buying leads with Down Payment Connect. You are taking advantage of our unique DPA eligibility platform to help generate your own leads. And nobody else get your leads, just you. So we encourage you to get creative and reach out to more buyers and educate them on these wonderful opportunities. We'd also love for you to join our growing Facebook group, Down Payment Insiders. There you can join over 12,000 real estate agents, loan officers, housing counselors, and even DPA providers as they discuss best practices with DPAs, first-time home buyers, perhaps working with lenders, learning from each other, marketing ideas, and so much more. You can listen in and learn, or participate in the dialogue and engage with those peers. We found it's also a great place to network and connect with loan officers that offer DPAs in your market. So I'll leave you today with a case study that illustrates how important DPA info is for realtors and home buyers. Amber here was a new agent in Florida. No one was helping her peers understand down payment requirements as many of them began to explore homeownership. So Amber stepped in, learned all about DPAs, and that helped build her business serving those same buyers. And just like Amber's clients, DPA customers become customers for life. So tell their story, help them, and they will refer their family members and friends. In closing, please feel free to reach out to us with any questions. We are here to help you and your clients find the assistance they need. We can be reached at info@downpaymentresource.com. And if there are any additional questions, we will be sticking around for a few extra minutes to help answer them. But I do want to add regarding Amber's testimony, if we're at this point of the webinar and something in your mind says, I want to share my story, that is something that we, of course, would love to hear from you um, about your successes, whether recent or past. So please feel free to also submit those stories to info@downpaymentresource.com. We love to read them. So with that, thank you all very much. And as mentioned, we will be sticking around for a few extra minutes to answer some questions. So to the team in the back, is there anything specifically that we would like to answer?
Well, this is Tracy. Um, First and foremost, I do want to remind everybody because we always get questions about this and I see it coming through a lot. We are recording this, and anyone that has registered for today's webinar will receive a copy of this recording by email. It takes a while to process, so it will probably be more like end of business day tomorrow before you see that come to your inbox, but it'll go to whatever email you used when you signed up. I do want to note, Shantae asked if you could go back to Amber's testimony slide. It looks like she was wanting to see that. And just so you know, Shantae, when you get a copy of this, you'll be able to have the slide deck as well. So you can take your time to visit that a little bit further as well. We are getting lots of questions about Down Payment Connect, where the leads come to, and I do want to address that real quick. The leads that you receive will come to your inbox. So whatever email address you use when you sign up for Down Payment Connect will be where those leads come to. If you are a if you are a member of an MLS partner that we have, then this is already set up for you based on whatever email address you have saved with your MLS. So your leads will come to that email address. And if that should need to change, then that's something that you would have to adjust with your MLS in order for it to be updated in our system and revise that for you. There have definitely been lots of questions. So
Sure.
I know that our team's still in the background answering a lot of them. But I don't know if anybody else has specific ones they wanted to point out. I wanted to make sure to point out those ones.
Thank you, Tracy.
Yeah, no problem.
Um, I do see question regarding participating lenders, and of course there are various ways to kind of go about locating those participating lenders. Starting with our eligibility search, part of the information that is provided is whether or not there's a requirement to use a participating lender when researching a specific program. Of course, our Facebook page, a lot of lenders and realtors having discussions, local organizations as well. If you're wanting to learn a little bit more about a specific program, they might have some suggestions. Of course, we talk about using your peers as a resource, attending events. I know sometimes there are lunch and learns maybe held by specific organizations. So a lot of ways to locate it, but obviously we love the energy of wanting to find out where these participating lenders are, because a lot of them are also vice versa, right? Trying to connect with their local real estate agents to go ahead and help these home buyers. Um,
Hey, Will, if it's
yes,
okay, I'm just going to tackle a few of these questions that we have in Q&A to help out real quick because there's a
yes,
lot of
please,
them
of
that are
course.
kind of repeat.
Yeah,
There are some specific questions about, I've had a lot that are asking about the programs that assist for special specific circumstances. First of all, I want everyone to know that down payment assistance programs are available to anyone. Like you don't have to have a specific profession or a disability or something like that. Anyone with those situations can use any of the down payment assistance programs. However, there are some out there. Now they vary from state to state and county to county as to what's available. However, when a home buyer or you fill out the eligibility search for the area in which you're looking to purchase a home, um, towards the bottom of the questions, there is going to be additional information you can provide if you are in the military or a surviving spouse, if you work in a specific profession, like our heroes programs, like firefighters or teachers and things like that, or if you have a disability, we account for those specific kinds of situations. And if you have a home buyer or you yourself have something that fits with that, you may find additional programs that come to the surface for those specific cases as well. So that is part of that eligibility search questionnaire that can be filled out and produce those results. And they vary, like I said, from state to state and area to area. And it looks like our team has whizzed through all those questions real fast.
Yeah.
But the address to sign up agents and get leads was a question from Angie. Angie, I'm going to put that in the webinar chat for you so you can copy and paste that. So let me throw that in there for you real quick. And if you don't have Down Payment Connect available to you for free through your MLS, you can sign up as either a loan officer or an agent at this link that I just threw in the chat for everyone. Once you go to that page, I see your question mark about how to sign up and use that. You're going to be able to find information on that page on what all is involved with being a subscriber to Down Payment Connect, depending on if you're an agent versus a loan officer. There are going to be differences for that. And then also the sign up process is very easy right there on that page. It is a month-to-month membership, so you can cancel at any time. It just finishes out your month that you've already paid for. However, we do have a yearly membership that is discounted. If you sign up for the yearly membership, then it's a full year term and you can cancel at the end of that year. And like I said, don't forget to look at your MLS. If you are an agent, there are several agents out there that actually have this for free to you right now, that you can literally just log into your MLS and you have Down Payment Connect as an option. And you can usually find that if you're one of our MLS subscriber, one of the partners that we have that you're a MLS member of, then you can usually find that either under products or external links, and you can just look for Down Payment Resource on there.
Thank you, Tracy.
Natalie, I saw your question about how do you get leads through your MLS. Like I said, when you log into your MLS, look for Down Payment Resource. Usually under products or external links, it varies from one MLS to another as to where that's located. But once you click on Down Payment Resource, it's going to take you directly to your specific Down Payment Connect page where you can find your link. And once you find that link that you can put out there in social media, on your email signature, anything like that, anybody that fills out that eligibility search using your link will then produce results that are sent to you in your inbox and to them in their inbox. And it's not sold. Their information is not sold. It's not going anywhere else. It's just going to the two of you. I'm sorry to kind of siphon your webinar, but I wanted to answer a lot of those questions that we kept getting pelted with. Anybody else?
Hey,
How do I?
I'm sorry, Will. This is
Mhm.
Mel. I
No,
just
please,
wanted
please.
to say something really quick too. We've had a lot of questions about Down Payment Connect. Obviously, Tracy's done a good job answering all of those. But I just wanted to bring up, we do a webinar. Our next one is in July, specific to Down Payment Connect. It's a really cool webinar. It tells you a lot more about the tool, how to use it. We would welcome MLS partner, members to that webinar because you'll get some information there, as well as, subscribers or potential subscribers, because we go through a lot of marketing, efforts and examples and just kind of best practices when using Down Payment Connect. I put the link to register for that session. It's free in the chat if anybody's interested. And then I'm also going to post a link, and I will include this in the webinar follow-up tomorrow for everyone. But I'm going to post a link in chat really quick to our YouTube page. We have lots of playlists in there with, past webinar recordings if anyone's interested. So anyway, just wanted to provide a little bit more insight on that. it's awesome that we've had that many questions about Down Payment Connect. So I just wanted to make sure that everybody had the information that they needed.
Thank you, Mel. I was actually going to ask about that and suggest our educational resources on the website as an important starting point as well, because we do, as mentioned, address a lot of these topics in individual webinars as well. And then, of course, we have content that's just been created over time that exists on all these social channels. So sometimes that may be a quick place to start if there's an answer, but obviously we love hearing from everyone. The last question that we will answer today is regarding how clients can get started. I presume that means with reaching out to program providers and getting approved for a program. That varies from provider to provider. In many cases, you will have to go through a lender that partners with the provider, or in some cases, you'll have to go through the program provider themselves because they may have some level of counseling that needs to be completed in order to preliminarily approve this buyer to use their home buyer assistance. But of course, a great start is running an eligibility search and learning about these programs and reaching out to them, and also seeing what those requirements may be as well. With that said, I want to thank everyone for everyone's time, our wonderful team, and of course, our wonderful guest today. A lot of great information. And of course, we'd love to hear from you if there are any additional questions. So I appreciate everyone's time today, and I hope you have a great rest of your day.